Joe, to pop out of this new range is popping up to the upper levels of this new range. Let's kick off this morning with Neil Atkinson, the former head of oil markets division at the IEA. Neil, it feels like this oil market does want to break higher. It's sort of pushing through the upper end of the range it's been stuck in for some time, 84 average in the first half of the year. Are we now on a breakout? Is this the start of a breakout?
I don't think you can say that with a great deal of confidence, frankly. I mean, personally, from harking back to my days when I worked for Petroles de Venezuela, this kind of price range that we've seen from just below 80 for Brent and mid 80s, roughly where we are now, roughly stable. Thank you very much. That's very nice. I mean, I never get excited by potential breakouts upwards or breakouts downwards. We are where we are, and the issue is that we've got a great deal of clarity on where oil supply is going, partly thanks to our OPEC Plus friends, but also pretty clear where supply is coming from in other parts of the world. The focus really is on demand and how strong is China, or is China weaker than we first thought, and how strong is demand elsewhere. While we're trying to sort that out and trying to understand how that is, the market remains reasonably balanced. And personally, I think it's okay. The price is okay for producers. Obviously, many of them we know would like a higher price, particularly Saudi Arabia. But on the other hand, it's okay. Meanwhile, for consumers, the price is, again, as you might expect, higher than they might like, but it is not so high that it's having a seriously negative impact on demand. So I think we're in pretty well a sweet spot right now.
Vibhuti Garg, Director South Asia for the IEEFA. Vibhuti, what's the outlook for India second half of the year? Of course, it was the stellar performer running into the election, 6-7% growth, GDP growth over the recent year, and looking to continue that. But now with Modi not winning a majority, should we expect that the brakes might be put on India's growth, and with it some brakes on energy consumption?
No, I think the outlook is very much bullish in India, so there will be no breaks. There is, in fact, more continuity of policy with the same government coming into power. I think there is a bigger push, and we have witnessed an increasing growth of energy demand in June, particularly on all fronts, whether it was electricity, oil and gas. So we did see a lot of increase in oil imports, both from Russia as well as US to India, whereas there was some level of decline from Middle East. So that growth momentum is gonna continue for the next quarter, not only next quarter. I'm quite bullish about India's growth story in the coming years, which will mean that there will be an increasing demand side push for all these fuels.
So just to follow up the video, even though Modi didn't get a majority, you see no change in the momentum of India's growth trajectory, its sort of reform program that Modi has been guiding for over a decade now?
No, with the coalition government, it is still in the majority. So they do will likely to continue with some of the reform process, which also means that India is also driving sustainable development, which is giving a greater push to clean energy, electric vehicles to balance out demand. But with such a growing population and such high rates of economic growth, where we are still building a lot of industrial activities, there is a lot of increased demand on transport as well. So which means irrespective of Modi not having the majority, the Prime Minister Modi not having the majority, but with the coalition government, it's gonna we don't see any hope that the demand will go down. I'm quite bullish on that front.
Paul Hicken, editor-in-chief of Petroleum Economist. We have a very positive outlook there from India, of course, second biggest oil importer in Asia. We have now also reports for the weekend. We are July 4th, the infamous, sort of epicenter of the U.S. holiday season, with airline travel predicted to be record levels, above even what was last year, a record level, both on the road and in the air in the U.S., traveling everywhere. Europeans traveling on more flights than there are available. This is a bumper travel season. What's stopping Brent going to $90 is my question.
Thanks, Sean. You sound like Goldman Sachs or a JP Morgan.
If only, there's hope yet, Paul. There's hope, yes.
Certainly, there is. It's like waiting to exhale. Everyone's been waiting for the summer driving season, for this huge stock levels to be commercial stocks to come down, and that trend is likely to happen. I think what's important is to see how much it will come down compared to expectation, and I think, given like what Neil said, against the backdrop where you've still got China uncertainty, the PMI data still around the 50 mark, all the problems around China are still there. So that's going to still weigh on the overall outlook. And to be honest, yeah, prices probably creep up, but I think there's not that much certainty, to be honest. And that seems to be the trend, but it's the trend that everybody keeps waiting to happen. It was a bit like US interest rates coming down. It's a trend that everyone seems to keep happening, and it keeps getting delayed. I think you go back to when OPEC started first doing the production cuts, and everyone thought they were doing preemptive and it was too early, and they've just been into this kind of long haul now. And it feels like everyone keeps saying, yes, the cuts, the US interest rate's going to come. We've got this summer driving season where everything seems, this bullish narrative keeps getting delayed. And like Neil said, I think there's still not that much confidence that you're going to easily get above 90 in any time soon.
Well, Neil, on that point, I mean, we did see the OPEC statistical report out earlier this week. They're what they call their annual statistical bulletin. And in it, I mean, there's lots of stuff in it to pick up. But one thing that I took note of was that Iran's exports are at a 5-year high at 1.7 million barrels a day. There's really no teeth in these sanctions. We see Nigeria also increasing its supply. There's no shortage of supply. So let me take the opposite point. Why is this price up at this level when there's just this massive amount of supply available? Obviously, what OPEC is keeping off the market, but also what these other producers who aren't bound by this OPEC agreement are bringing onto the market. Prices are still quite elevated given the availability of supply.
Well, let's just go back to the first point you made about sanctions. I mean, sanctions are useless. They essentially do not work. And in fact, in some respects, they're self-defeating. In the case of Iran, we've had sanctions against Iran now since, I think, 2018, when Trump, or early 2019, when Trump pulled out of the JCPOA. And, it has been politically inconvenient for US administrations to see sanctions against Iran rigidly enforced. Why? Because a significant reduction in supply threatens higher prices, which in the United States means higher prices at the pump. And that matters far more than rigidly enforcing sanctions against Iran. And the same argument applies to some extent, although it's less important, in the case of Venezuela, where, the US has been attempting a dialogue with the Maduro regime to see if there's some way in which democracy can be improved in Venezuela. And that has given the US the opportunity to relax sanctions to some extent. The sanctions against Russia following the invasion of Ukraine, where the G7 countries and everybody else that joined in sanctions against Russia, we essentially wanted to have our cake and eat it. We wanted them to be able to continue to export because we need the resources, but we didn't want the price to be so high that it would help support the Russian economy. And in the end, that's failed as well, because Russia continues to export massive amounts of particularly oil to China and
Neil,
India.
let me just interject there, because one of the things I've been to get my head around is absolutely, I concur 100% what you're saying. Sanctions have failed, but my question is, why are they failing? Are we driving ships that don't have insurance? Have we ports accepting tankers that don't have coverage? Are they illegal? Where is this breaking down? Obviously, the US or the others are not policing it, but there's a whole system of actors here: dark fleet, insurance companies, tanker companies. Where is this not working?
Yeah, sure. Yes, obviously, point one, yes, they're not being enforced as rigidly as they could be by the US and its allies. Point two, of course, there are always people, very sophisticated people, very well-resourced people that will do everything they can to find loopholes and find ways around around the sanctions, because it is in their commercial interest to do so, which is why we've got the dark fleet, which is why we've got the growth of alternative insurance markets. It's human nature, whether we like it or not. People will always find ways around it, and therefore the supply will be higher than the people who impose the sanctions would like to see. And it's contributing to getting back to your later point. It's contributing to the fact that there is plenty of supply, because of course the increase in exports from Iran in 2023 was second only to the increase in production from the United States, I think, in the overall supply league table for 2023. So yes, it's part of the fact that there is plenty of supply out there. But coming back to our earlier point, which I made before, and Paul and Vibhuti have reinforced, is that the picture on demand is not wholly clear. And if for the sake of argument, we were to see really great numbers on the demand side, then that might change the perception on the assumption that the OPEC plus countries maybe don't bring back as much oil later in the year as they're suggesting they might, because that's another factor that's sort of lurking further down the road, keeping this balance in the market to make sure it doesn't go too hot or for the interest of the producers too cold.
Vibhuti, on that point of sanctions, obviously India were the poster child of benefiting from the the first year of the sort of Russian discounted oil going into Asia, circumnavigating the price cap. What is that outlook now? Does India can still continue to enjoy discounted Russian oil, or is that essentially floated away? What's the outlook on that at the present time?
I think the discounted rate has gone down substantially. So which existed out $12-13 per barrel, it has gone down to $3-4 per barrel. So the discount is there, but the ban has gone down substantially over the last few months. So yes, India still enjoys some discounted price from Russian, but as I said, the margins are not that great anymore, but still we are increasingly seeing more and more imports happening from Russia, as well as I said, this last month, as per the recent data, even from US has gone up. So I think given the increasing oil demand, so India is increasingly scouting for supply. And if it doesn't matter, I think, for India, if there are good relations and they are able to source that supply from any country, they are looking at those options, because they are very hard bent on meeting the energy demand rather than, asking people to shut down their industries, or for that matter, as you said, even India is increasingly seeing increasing demand from both air, as well as the road transport. The number of vehicles that are being sold are increasing on a month-on-month basis, though we are increasingly seeing sale of electric vehicles going up, but ICE vehicles are still being sold in large numbers. So that's the growth story in India. But quickly responding to, why we are not possibly seeing, despite supply not being an issue, prices going up, while demand increasing at such a fast pace. I think the countries are increasingly recognizing that, the supply nation, the countries which are exporting oil, that there are now alternatives available. So if the prices go beyond a certain level, there will be a natural choice for countries to start investing in other resources, which are much more cheaper at a much faster pace. And that's where we'll see the demand declining even in a much faster pace. So I think they're taking a very careful watch in terms of not increasing the prices to a level where they can make super normal profits or gain out of this whole situation. But that's a very short-term view. I think that becomes smart, that let's not push the countries to switch from oil at a much faster pace, and let's keep the prices in a reasonable range where the demand happens. At least there is likely visibility of increased demand for the next 10-15 years before we'll see electric vehicles taking over or other solutions. So the technology is constantly evolving. We are increasingly looking at green hydrogen being used in heavy duty vehicles. So there are a lot of discussions on newer technology. So I think they just want to remain relevant at least for the next few years.
Paul, I mean, coming back to sort of the basics of the fundamentals in this market, you mentioned in your earlier comment that, waiting for Godot, the third quarter was going to deliver the sort of bumper demand for the year, and with it, maybe meet some of those forecasted demand growth projections for 2024, which, in reminder, 2.2 million barrels a day forecast by OPEC, half of that by the IEA. We're starting to see that now. I mean, that's the simple reason why oil is breaking out and heading to 90. American Petroleum Institute reporting yesterday that inventories reduced by 9 million barrels. I mean, that's a massive number any day of the week for inventories. In the declining inventories, which is what was predicted, is the floor more than the floor, maybe even the rocket under this market, combined with record driving and airline travel this summer.
Yeah, it's true. It's anecdotally, it is starting to happen, and prices are rising as a response to that. That's very true, Sean. But I think the important point,
I suppose, it's a much stronger. Is it the counter narrative to the China weakness narrative? Because the China weakness is there, but it isn't terrible, I suppose.
Well, I think I want to go back to the point. It's all about partly about expectations. This market is driven by those expectations, and a longer what people longer term we expect stock draw. The inventories are high. We expect them to come down over the next 2 quarters. We expect we've been expecting interest rates to come down. All these things are about expectation. But I think I want to point out what Neil mentioned, amplify that, which is the OPEC narrative is still here. It hangs over the market like the sword of Damocles. They want to bring barrels back to the market in the third quarter. They're itching to bring back, especially the core 8, the voluntary cuts from the core 8. They are quite keen to bring them back. And I think while that is in the market, it's always going to be a kind of cap to the bullish narrative. I think when you get back to the regular OPEC, if we get back to a point, maybe in 2025 or 2026, when OPEC is just down to its only its formal agreement of production cuts, I think that's very normal, and I think that's what OPEC's about, cutting supply to balance prices where it wants to be. But I think the voluntary cuts are the ones where it really hangs over the market almost like a cap. Although it's supposed to be bringing barrels out of the market, and it has provided a stabilizing, a balancing force. At the same time, it does hang over the market.
Let's go to the survey question this morning, which is sort of driving the direction of my questions, which sees record summer holiday travel in the US and EU will drive Brent crude oil to $90 in July. We are seeing those record numbers emerge now. They aren't just no longer forecasted this weekend. Tomorrow is July 4th. People are already traveling in record numbers this week, and ahead of that, a big US National Day holiday tomorrow. And the US airline industry has predicted the growth in airline travel over June to August to be 7% above last year, which was already a record. So record, basically. aviation fuel and gasoline consumption for this summer travel season. Will it be enough to drive this number above where we are now, knocking on 87, back up to 90, getting to 90 on the good old-fashioned consumption, supply and demand, rather than geopolitics? Agree or disagree with that point of view? Our U.S. correspondent Neil Atkinson has just returned from the bowels of Washington, D.C., and we wanted to get your insights, Neil. We're all living a little bit far away from the inside of U.S. and, of course, are all affected by its minutiae. What was your takeaway from your recent trip?
Well, I went to Washington to speak at a conference, which was essentially a global energy outlook event, took place over one day, and looked at pretty well every aspect of the energy system. It wasn't just obsessed with oil. And what I came away with was the clear impression from the participants, most of whom were connected with the energy industries in some way, many of whom were actually investors, not just people that sit around talking, but a lot of people who put their money where their mouth is. And their view was that because of America's almost unmatched natural resources of energy, whether it be oil and gas and to some extent even coal, and the United States lead in technology in many aspects of commercial life, the US was very well placed to continue to invest and continue to grow energy, that including oil and gas, because they take the view, which I subscribe to, that the long-term demand for oil and gas will continue to be on an upwards trajectory, higher for longer, whether you like it or not. And the consensus amongst a lot of these people is that a Trump administration, a new Trump administration, would be better for American business than a re-elected Biden administration. And it's got nothing to do with Trump's personality or other issues. It's about what is good for business. And as far as those people are concerned, they are looking towards a second Trump presidency. Now, you can make of that what you wish. Another factor that lay behind it was not necessarily enthusiasm for Trump personally. It's enthusiasm for what they think will be better pro-business policies. At the same time,
sorry to interject. I just wanted to sort of challenge a point there and see if you have any comeback from your insights in Washington. Is that I'm increasingly getting the impression that with the majors taking over the shale patch and the acquisitions of the big independent producers there last year, that the majors don't want to did put a lot of money in the ground in elevating the shale production, because of course they're very cognizant of the impact it would have on oil prices. And so from the commercial interest, yes, I'd like to book the reserves in my balance sheet, but I don't want to book production because I know it will have a downward impact on oil prices. And indeed, this takeover will be flattening out of U.S. production. Your thoughts on that?
No, you're right that the majors are taking a bigger role, of course. And that, to me, underpins the long-term future for shale as well as other energy assets in the United States. There is not going to be a drill, baby, drill mentality, even if there is a second Trump administration, because of the more cautious approach taken by the majors. But the point is that there are other measures which Biden took, such as the XL pipeline, I think was nixed on his first day in office. We've got this situation with the new export permits for LNG, which has been put off for what people regard as blatantly political reasons this year. Things like that. It's not just a question of drill, baby, drill. It's the fact that it's a huge industry in the US. It's a major contributor to stability in global markets for oil and gas because of its massive and likely growing export capability. And there are some of the people, or a lot of the people that I was moving amongst last week, want to see an administration which lets the US increase its energy potential. Yes, it's business, it makes money for them, of course, but it's important for the stability of global markets. And, I wasn't just in DC. I moved on to New York, and some of the best conversations, as you'll probably agree with, Sean, take place at a bar, and sitting up at the bar. And there are people, again, these aren't hicks from the sticks wearing MAGA hats. They're people who are active in business, quite, senior professional people that take the same view that Trump will be better for the US economy than a Biden administration. Whether you agree with that or not?
Well, certainly the statistics or the polling is indicating that, rightly or wrongly. Vibhuti, meanwhile, in Asia, which is of course the most important center for marginal demand growth, whether it's 2.2 million as OPEC see it or IEA 1.1 million. What's your outlook for the second half of this year? The first half, Asia was fairly muted in its demand growth. What's the second half beyond India and into the rest of Asia?
I think for the rest of the Asia, we will see similar kind of muted demand. The demand was driven largely by China and India, who will continue to grow. But as far as the other economies are concerned, I think we are seeing some muted demand, whether it's Pakistan, Bangladesh, and few other countries which are again dependent on oil and gas for meeting their energy needs. Primarily because of, their economy is not doing well. But so the outlook looks a little bearish, but overall, the Asia just being driven from the demand being driven by China and India will make things very, very different.
Let's close off, Paul. Last word with you. The what we have here is disagree. Record summer holiday will not get us to 90. There's a big 2-to-1 disagreement with that thesis. Looking to the other sort of pillar to the oil price, geopolitical risk premium. Your thoughts? Last week, this week. It feels like the return of geopolitical risk premium as the wars in the Middle East and in Europe between Russia's invasion of Ukraine start to bubble up again. Your thoughts on that coming back into the price?
I think it's something the market hangs its hat on when there's little else for it to focus on. I think because the market has been in this kind of sweet spot holding pattern, in the words of Yogi Berra, the baseball coach, it's deja vu all over again. And I think when you got to remember that most of this geopolitical risk premium it's in areas where there's the likelihood of any actual supply disruption is low. Russia really is the one where you'd say there's more potential for actual supply outages, and even then we've been here for more than 2 years. So I think it's a little bit of a something that people hang their hat on when it is such a stabilized market, and you're looking for this breakout session, which we've been scratching around today for this half an hour, and it feels like from the poll, people aren't convinced even it's going to break out this range. And usually on these polls, you normally get probably a majority once it gets to so close to an upper or lower side that people seem to want to push it that way. And even in these polls, it hasn't materialized. So. And like you said, even with this big crude stock draw, even then it feels like the market is waiting for a real hurricane, not Beryl, but a really big hurricane to try and knock it out of its range.
Well, we're going to have to leave it there. Brent crude oil trading at 86.70, up 0.5% in early Asian trade this morning. It seems as we started our conversation today, and Neil sort of aptly said, the oil is in its happy place. It's in that sweet spot price. Everybody can be content in the mid-80s, producers and consumers. Inflation may still be feeling the upward pressure of this sort of energy price, and that may, we'll see how that translates into the next Fed decision or signals from the Fed, and that Fed cut could be the trigger to send it to the next level. We'll have to see. But Neil Atkinson in Paris most of the time, a big weekend coming up in France, really looking forward to seeing the outcome there. Will the right come in with that majority that seems to be a little bit elusive? Paul Hicken sitting on the doorstep of an election as well. Big elections in the UK in the coming days. Best of luck with that. And Vibhuti Garg living in the hangover of the biggest election in the world in India, with the surprise that Modi didn't get a majority, but he has got his coalition. What will we see in France and the UK? These are big elections, will have ramifications for many things. We'll have to wait and see how they play out. Thanks, guys. Have a great rest of the week. All the best. Thank you.
Thanks all. Thanks, Sean.
Thank you.